Mixed open, a little more interesting over in China. I just want to show Shanghai is down a little bit. Remember, they're up 20% for the year, so they're among the best performing global markets here. But the industrial production numbers were really a disappointment, really 17-year lows. Retail sales match the estimates. Why do we care about it so much? Because this is really hurting our earnings estimates in the United States. If we can get a more stable China, then the earnings revisions, the downward revisions we've been seeing for the last few months, well, they'll stop. And Europe would be a big help, too, if we get a little more stabilization. So, yeah, we're watching those numbers. Germany's okay. FTSE, even the FTSE is near the highs for the year, despite all the Brexit chaos that we're seeing. Sectors, I like what I see at the open here because the cyclicals were leading, and they've been out in front of everybody for the last 2 months or so. Tech, energy and industrials, what I'm talking about. Utilities lagging a little bit here. So if you look at the sector leaders off of the bottom, the December 24th bottom, they're all cyclicals. Technicals, technology, industrials, communication services, energies. Those are the top ones. These are classic cyclical names. The laggards, well, even the laggards are all up, but they're all defensive names. So you see healthcare and utilities. You put up the next one here, healthcare and utilities and consumer staples. They're lagging, but still up about 12%. What I want to talk about is that 2,800 level in the S&P. I mentioned yesterday this was the best close since beginning of October. We have been here 5 times and tried to rally over this roughly 2,810 to 2,820 level. 5 times we have failed. We'll see if we can do it again. But look at all those times: October, November, early December, late February, early March. So that's why technicals are very important here. If we can just blow over this, that'll be a big help. I think we're being helped a little bit by this quadruple witch. We go through this 4 times a year. This is the week where there's a quarterly expiration of options and futures. My friend Jeff Hertz has pointed out that generally this week, this particular week, has had an upward bias since '83. It's been up 24 times this week, down 12 times. That's a good bias overall here. Let's move on here, talk about earnings. 2 important earnings after the close, Adobe and Oracle. Why are they important? Because they have February ends to them. And this will be the first real companies to talk about the first quarter, essentially. It's not into March, but it's end of February. That's going to be important. And if we can get some decent commentary and guidance from them, the probability that we will get negative earnings growth in the first quarter and second quarter will go down. So we're going to watch them as bellwethers. We've talked about this so-called earnings recession that people are concerned about. Look at the first quarter numbers. We're still down 1% on our estimates for the first quarter. Second quarter is still on the upside, about 3%, as you can see there. And the question is, does this flip around? There's a good chance, I'd say it's less than 50% that we're going to end negative for the first quarter, but a lot of the tone of this is going to be set by Adobe and Oracle right after the close here. We're just up fractionally in the Dow. We'll see if we can get toward that 2820 level on the S&P 500.